Tom Gentile up next is correct. It's always nice hanging out with Vaz in the middle of the day, and it's also a great time hanging out with Tom. We're going to bring him in power profit trades for the next 30 minutes in 5, 4, 3, 2.
Hey everybody, good afternoon. Welcome to Power Profit Trades in our final session for this week. And we've been talking about quantum scripts. We've been talking about trend trading, quantum scripts all week now. What a couple of days we've had here in the markets. The last couple of days have been absolutely crazy. It's been great for the quantum members as we have been clipping off winner after winner this week. I want to talk about how it is we get into these trades. We started talking about it yesterday. I want to continue today. I want to talk about how you take a strategy, how you take whatever it is that you're spotting as a pattern and really try to validate it as a trading strategy, as a trading system through means of back testing, also how to tweak that. We're going to show you how we tweak it using stop losses as well as adding a noise filter in. Now, I got to tell you, Quantum Data Profits absolutely having an amazing year. We launched this product, this service, I want to say probably about 6 months ago. Does that sound right, Eric? I think it was about
It does sound right. Yep, I think
April,
so.
May, June, July, August, almost 6 months ago. And since then, in the 5.5 months that we've been, that we launched this as a service, we've had an amazing 44 double and triple digit wins. And that's been in about 20 weeks. So if you look at the average per week, that ends up being about 2 double or triple digit winners every single week. And those winners have been happening while the Dow, the NASDAQ, Dow is down about 14% this year. NASDAQ, 28%, S&P, 26% down. And we've had 70% winners with a total percentage gain of nearly 30%. So while you look at the NASDAQ is down almost 30%, we've rotated, even with a mix of bulls and bears, we have rotated upwards and have about 30% wins with all of our trades, winners, losers, etc. Let's throw this up on the screen here, Eric. I want to show them the August positions. So August was the start of the next move to the downside. And so I want to show you what we did in August. And now, August wasn't an entirely down month because if you take a look at this slide that we put together here for you, this spreadsheet. So let's just go across the top. You got your position, obviously. Now, current weighting means what we have left on this position. So, for instance, with APA, it shows a current weight of 50%. That's because we've already taken 50% off, okay? And then if you see Baidu as at 100%, we've taken 100% of that position off the table. So, going across and you'll see start date, open price, close price, and returns. And you'll see something called weighted return. So take a look at APA for a moment. It shows a current weighting of 50%. That's because we've taken half the trade off. The half we took off has made 172% for us, but we still have half on. So you take that 72% and divide it in half, and we're showing the current weighted return with today's price sitting at about 86%. Now, if we took the rest of this off, then net weighted return would increase quite a bit, quite substantially. That weighted return is there simply to say, well, what if the rest of the APA call went to 0? What would we still have? And it shows us that positive weighting. Now, take a look at the third line. This is Baidu. Baidu, we've taken 100% off the table. The trade went from 8.1 to 8.4. It was only around for 3 days. And the thing is that it moved against us so fast that we ended up getting out and stopping out. You can see that 68% loss on Baidu. All right, there's Moderna with a 35% gain. NUE, that was a 50%er on that first half. We're still sitting on half of that trade. It's still yet to close. PBF, that was a loss. Okay, that was a trade that was put on back on the 3rd, and we ended up taking it off on the 30th. All right, took that off 64%. And you might say, well, how come you didn't take it off at a 50% loss, Tom? Well, because guys, you got to remember, when a stock gaps against you and it gaps through that 50% loss, you take it off, for whatever you can at that time. And that's what happened. We ended up taking that off for a little bit more of a loser. But check out the winners. SWKS, 36%. We had a 100% trade on TDoc and another one that came off at 88%, 100% trade on Yeti. That's just September or August. September, even better. But Eric, you put together a couple of just on August. You've put together really the totals, summing
Yes.
this up.
Yeah. So if we compare if we're comparing quantum versus the S&P, 39.73 historical weighted returns, and historical S&P weighted is minus 1.33, Tom.
Yeah, you got to remember too that August started out as an up month and ended as a down month, and that's why you see the S&P down only 1.33%. It's dropped a lot more since then here in the first 2 weeks of September. But even in that up down month, we managed to pull out almost 40% just in the month of August. And I mean, take a look at what just happened yesterday. If you were with us, folks, we were talking while the markets were dropping 700, 800, 1,200 points down on the Dow. And we were talking about this is a time to either step in and get bullish, which I think was not the right time. But what it was really the right time to do was start taking profits on bearish positions. And that's exactly what we did.
Mm-hmm.
And we emailed some instructions out to our members. Eric, can you show them what we put out yesterday?
Of course I can, Tom. We had on September 13th, as you said yesterday, we had 3 different actions to take. Let me take you guys through them right now. First one is close half of your Universal Display Corporation higher probability spread position at 2 times your entry price. The instructions to do that are right there below. You're going to be setting a stop loss on the remainder of your position at your original entry price. Then we had a second action to take, close half of the Universal Display Corporation higher probability long put position at 2 times your entry price. That's going to be giving you guys a 100% gain. You have your instructions there as well. And the third action to take was close the remainder of your APA Corporation higher probability position, and that was for another 100% gain. And of course, instructions on how to do all this come through in the email, so you know exactly what to do.
Yep. And keep in mind the market's kind of taking a pause right now. So I mean, it's after that big exhale that happened yesterday, the market's kind of in pause mode. Up a little bit, down a little bit. I've been watching it for the last couple of hours, and it's that pause is really waiting for that next big catalyst, right? The next big catalyst in my mind is the Fed announcement, which is going to be next week. So we might be pausing, we might be range bound. What we're seeing in quantum scripts is very, very interesting. I've got 4 possibilities that I want to share with each and every one of you here before 12:30, right? But we might end up picking one of these things right out of the gate here. And I will tell you, those of you that are Quantum Data Profit members, we will be picking one of these trades, and you will be getting it from us very, very soon. But I want to show you the 4 that came up on the radar today, and that includes something that I like to call the noise filter. So we've got that. We've got that big rate announcement is coming out on September 21st. We want to be getting in before that announcement. I mean, lots to talk about here today, Eric. But I didn't even get to ask you, how's your Wednesday going?
Oh, Wednesday's going well. I had a little break in between shows. I went outside. The weather is beautiful. It's nice to step away from the desk for a minute. Things are going well. But I know we do have a lot going on the show today. How are things with you? I see you're back in the farmhouse, so I guess the electric work is done.
No, it's not.
Oh.
It's not done.
Oh,
No,
oops.
these utility companies, they pushed it back to Thursday.
Okay.
So I decided I would kind of hang out over here today, and I'm going to be back over my Overland office tomorrow because they're saying the power is going to be out for quite some time. But I mean, speaking of the power out, the power looked like it was out in the stock market yesterday. And, you would think after a day like yesterday, we'd get all of these quantum bearish signals. But no. Are you a basketball fan, Eric?
I'm a huge football fan. I like all sports, but I don't really watch a ton of basketball, though. No.
All right, so how many of you out there, here's our old school ball players, how many of you out there remember Dikembe Mutombo? Used to play for the Atlanta Hawks. And every time, there's several times you'd see someone kind of come into his lane and either try to dunk it or get the ball up over him, and he'd smack it back down and he'd go like this. No. Well, that's what quantum did yesterday because, a lot of people thought, oh, it's time to get bearish because everything's turning south. But quantum said, no. In fact, we have a split decision today on a couple of bulls and a couple of bears, but we'll read into that as well. So, I think what we ought to do is really kind of just do a quick little review, on what it is that we were talking about in our past conversations on Monday and Tuesday. We were talking about the first two lines of code with quantum, and the first two lines of code, which are trend trading code, is simple moving averages. And so on the screen, I've got Teladoc on the screen because we've been talking about that one. But yeah, take a look at what Teladoc was sharing with us with its simple lines of code. And we had a move that started out in June. If you remember, June 18th was a low day for the stock market and a low day for cryptocurrency. I almost feel like cryptocurrency was pulling the stock market back in the middle of June. Stock market rebounded, crypto rebounded a little bit, but you can see here that we really started to see some bullishness. It didn't last too long for Teladoc, as we were around the mid 30s, and we ran up to almost the mid 40s until that earnings report came out, smacked it down. All right. At that time, we started to see the 10-period moving average, which is what we follow, 10 and 30-period moving averages, started to crest right after earnings. You can see it coming down. You can see the 30-period moving average still starting to move up, but we started getting a shift with this particular stock, saying, you know what? This one looks like it's ready for another leg down. And that's exactly what ended up happening. You had to get through a week of kind of movement against you, but 39 became 29 within a matter of a couple of weeks. And again, Eric, we were talking about not only spotting the opportunity, which we spotted it here in Teladoc, but what else did we talk about? We talked about creating that acceptable risk trade. And we did two different trades with Teladoc. We do that with most of our quantum script signals. And that was what we like to call a high probability trade and a high profitability trade. Now, a high probability trade is typically going to be a spread. And the reason we call it higher probability is because when you're spreading options, you're doing it at a lower cost, a lower risk, and a better break even to the stock than simply going out there and buying puts, which we did also. Now, with Teladoc, because it dropped so fast after the 15th of August, you saw August 16th, we started to drop. And let me throw up, wow, I'm missing a major portion here of the program. Eric, you know what that is?
That's Tom.
It's the big red mouse.
What is it without the big red mouse? No one can see anything without the big red mouse.
Go. I mean, I'm sitting here like moving along because I can see this just fine, but I know those of you that are following me may not be seeing that move up, that crossover. We got a little bit of noise there, but not much, and then bang. And this is what I was talking about: the 16th, the 17th gap down, the 18th gap down, the 19th gap down. In those 4 days, we saw put options flying, and that's how we were able to get out of put options, or part of the put options on Teladoc, so fast. So what has happened since then? We've seen it kind of rotate down. We're out of this trade. This trade is gone, right? But we got many more just like it. I wanted to bring this up on the screen to show you. And here's a really interesting thing, Eric, is that Teladoc might even continue to extend because we're seeing separation happening between that 10 and 30 period moving average. And we're seeing, again, what happened yesterday could take us back down to 29 and even below 29 for that move to the downside. That's all well and good, folks, okay? So we've talked about trend trading. We talked about multiple ways we play Teladoc and all of our signals, our first two lines of code that you see there. But let's talk about how to take this and, how I started backtesting. How I started backtesting this particular signal, and then how we added noise filters on and then applied it to a group of stocks. So I backtest with one, and then I move on to the entire group, right? So I backtested with a very, very popular stock, and I'll show you what I did. So, we talk about testing a strategy. It's one thing to look at a screen and say, oh yeah, that looks good because this is crisscrossing over this, or this volume is spiking up. That's all great. That's great when you can see it in the present form. But how well did it actually do in the past? All right. And this is what's going to separate, your traders of today from the ones who mine data and exclusively use data and go back and are able to quantify their signals and quantify their strategies. For me, if I'm going to trade something, I want to ask the system, the strategy, the signal. I want to ask the signal, well, how well did you do in the last year, 3 years, 5 years, 10 years? Give me some real numbers. Don't just give me something that you say, oh yeah, when this goes above this, or when this comes down here, or when the volume does that, or the volatility does this. That's great. What did it do in the past? All right. How well did it do? Because I don't want to follow something if it doesn't have a true pattern. So I want to show you how I take a pattern like this and actually see if it's valid to trade Tom Gentile money. So what we do is we look at back testing. So what I did was I took Google back in 2004, from 2004 to 2014, when we really started looking at this as a true trading strategy, not just some indicator. So I did 10-year back test on Google, Eric. And at the time, you got to remember, Google was not Googl back in 2004, not even in 2014. Google was just one symbol, Goog, before they created the B class, C class, preferred class, non-preferred. They were just Google. And so what we did was I said, all right, you know what? This 1030 looks interesting. Let's look and see how it did in the 10 years with Google. Google's an alpha stock. That's great because we know it works well on Google, but how well did it work? So what I did was I ran the numbers, all right? Long trade setups, short trade setups, and you can see down here from 4/1/2004 to 7/1/2014. This is what I came up with. So I ran the numbers and I see Google symbol and I see the long and shorts coming in. And then I see entries and exits. And I also see realized profits and losses. And I see percentages. And then I want to see, well, what did the whole thing do? Give me the summary. And the summary for Google looked like this. And I got to tell you something. Trend trading systems are, in essence, designed to work less often than they do. When you're trading a trend, expect to be wrong more often than right. Because when you are right, you're going to make a lot more money than when you're wrong. Okay. A lot of you have probably heard this before from me and the other guys here at Money Morning Live. We can, you've heard many of us say, well, if you could make money on one trade, more money on one trade than you lose on the next 9, would you do it? And a lot of people would say, yeah, of course I'd do it. But then get into the muck and try it. Try losing 9 times in a row and see if you could take that 10th trade. What I look for is I try to look for patterns that work more often than not and still make money more often than not. So here's a trend trade with Google, and we see, okay, this was almost a coin flip, 51 and 46. All right, 51% winners, 46% losers, and there's that small percentage that's open that doesn't calculate in here. So you had over the 10-year back test, 41 winners and 37 losers, but the average trade profit was positive. Great. How can we make this better? So what we did was we threw a 10% stop on the stock. So if the stock price, if you took a long signal and the stock price turned around, went against you by more than 10%, that was a stop. Get out of the trade. Get out of the options if you're in options, if the stock moves 10% against you. So we added that in. Now I want you to take a look at this number. This is 4,095. Adding the 10% stop in, it only jumped to 41.25. So it only went up by $30 more. So adding a stop in didn't really help matters. And you know what ended up happening is our winning and losing trades didn't change. All we did was we were able to take the losing trades off a little bit and save ourselves a little bit more money. When I went in and looked at losing trades and I went back and forth, Eric, what I found was that the tighter you put the stops in, all of a sudden you might save some losers, but you might lose some winners as well. So that's a fine line you have to walk. Right? And that's where artificial intelligence comes in. But the big thing we were finding was we were having problems with the 1030 crossover because it was creating too many signals. Which ones do you take? Which ones do you not take? And when we were in the choppy pattern, like August was a big choppy month. Sometimes you get too much noise. Now, how is it that August was a choppy month for most trend trading systems, but we did quite well with quantum data scripts? Because I want to talk about what we did, which was called entering the quantum realm. And entering the quantum realm means that we want to have less trades, but are smarter trades. And by doing that, what we did was we added a noise filter. The noise filter basically goes in and looks at that 1030 cross and it says, is this noisy or is it not noisy? Right? Meaning, Noise is when you get caught in a sideways channel. And if you trade trend trading systems in sideways channels, you end up taking small losses. By doing that, we want to remove those losses and we want to increase our profits by trading smarter, not harder. Now, remember the $4,000, it was like $4,000 profit that became a $41.95 profit on Google over 10 years. Look what happens when we enter the quantum realm. 14,285. We tripled our profits, almost tripled our profits by putting on that particular quantum realm. Now, the next thing we did was we only applied it to stocks that were alpha-based stocks that had a high historical rate of winning. We were able to take that 15% win up to 82%, right? So, or that not 15%, 51%. That 51 and 46 on Google, we wanted to make that better because, it's hard when you're trading a trend trading system. Not many people can do it and lose, and then take that next trade. Because for me, and a lot of people like me, you can only take so many losers, and then you don't take the next winner. And you don't take that next trade, which becomes a monster winner, which then takes all those losers away and then some. So what we wanted to do was create a system, Eric, a strategy that allowed us to do a couple of things. Allowed us to go in and find those trades off those first two lines of code, but then run them through a second ringer and see if it had noise in it or not. If it had noise, we eliminated it. And that's how we're able to take. There were in the 500 stocks in the S&P 500. I think we saw 200 of them give bearish signals in the last couple weeks, and we scrunched that down to just about a dozen or two. And then from there, we're looking for options on those trades. This is the bullish side. By the way, this is a 5-year back test, guys. The bullish side from July. This is from 2017 to 2022. Look at the bearish side. And remember, we didn't have a lot of bears until this year. And you can still see 71% on the stock on the bear side from July 21st, 2017 to April 2022. Again, how have we done lately? The numbers speak for themselves. This was the back test, and we forward tested too. But when we launched quantum data, profits, we knew that we'd already had a successful pattern that worked. We had back tested proof that it worked. Did we have a guarantee that it was going to work all the time? No, there are no guarantees in trading. We all know this. And we've taken some losses in quantum data, but we've cut those losses and our profits are much, much better. And as you can see, we went on a 10-0 run, 12-0 run on quantum right out of the gate. And then most notably in the month of August, I think we hit 13 winners. We talked about that earlier in the week. So let's talk about what the software, what the AI, and what the strategies are showing us right now in terms of signals. So this is what I'm talking about when I say, no, we're not fully bullish. The scripts are starting to tell us, hey, let's take a look at a couple bulls. So today I got two bulls and I got two bears. I've got a bull in DTE, a bull in IDU. Then look at the bears, Baidu and KWeb. Now, when you first look at the scripts, you go, oh, 2 and 2. 2 bulls, 2 bears. That means a lot of people gravitate this way, Eric. They go, oh, the market's going to go sideways now. Not necessarily, because we need to look into these and see what they are and what they're doing. So I want to do that with everybody right now. So at this point, what I want to do is I'm going to take a look at these stocks. I've got them already loaded up so I can show everybody what they look like. Here is DTE Energy Holding. Oh, energy. Okay, so when you see it as a symbol and you don't know what it is, you just think it could be anything in the market. All right, well, energy stocks, this energy holding stock has been moving higher. And more importantly, if you look here, there's that June low, and here's the high. But look what's happened. It hasn't fallen off like the market. It came down. It went back up again. Now it had a pretty rough day yesterday. Not as rough as most of the stocks in the stock market going down, but it did pull back. But we've got a quantum data bull on energy, on this energy stock. Take a look at stock number 2. All right, this is the Dow Jones Utility Company. Energy and utilities. again, dropped in for a low down here at the end of June, and then started a succession of higher lows and higher highs. Now, what's interesting is that we had the first quantum bull signal right here around 86. That took us up to 96. We've paused. Looks like we're maybe getting another quantum bull signal here today with this. If this is the case, what is the if I were just looking at this and let's look at our two bear stocks and then we'll make this case. But our two bear stocks that we're looking at coming up today, number one is Baidu. Now, Baidu, since May, has been pretty much a sideways mover. As you can see, it's been top lining right around 155. Look at the earnings report. It slid down right after the earnings report, tried the rebound, and has dropped lower. And you can see down here, that low is down around 128 that we saw back in August. But we're getting that crisscross bear on Baidu, okay? Now, why did we not take any bullish signals on Baidu? Because the noise filter pulled the bulls out. So it's looking at the bears. All right, let me show you one more. Look at KWeb. All right, so isn't Baidu considered the Chinese Google? And isn't KWeb? Well, KWeb's a China internet stock, and it had a nice little bearish opportunity that started in just above 30, dropped all the way down in 27. That was a 10% drop. Had a big pop up, didn't last long at all, and then fell right back down. And it looks like we're sitting on some really interesting support that might cave in and take us down to the mid 20s. So we have two bullish opportunities in what I like to call safety stocks and two bearish opportunities that we're seeing in Chinese stocks. So when you look at the four stocks that we have set up, Eric, it just looks like, what we're seeing is maybe the markets aren't going to drop to new lows. Maybe they will. Maybe the markets aren't going to rebound from here. Maybe they will. But if you look in these sectors, the sectors are showing the strength. Quantum Scripts is confirming strength in energy, at least in this sector of energy. And quantum is also showing weakness in the stocks that are overseas in China, the Baidus of the world and the KWebs of the world. So what do we do here with these? Again, guys, these are opportunities. We'll go in and we spotted the opportunity. So now what we want to do is try to create a low-risk trading opportunity. And for us, we'll be looking at high probability trades and we'll be looking at high profitability trades. And then it's a matter of planning, executing, and managing. And you see all of that when we put that together for our QDP members. Now, we tried to get into a trade yesterday, but with all the movement in the markets, it just wasn't happening. And I wasn't going to go out there and just throw any number at the market to the downside, right? But today is a good bit of a pause day today. I'm looking right now, and you've got the Dow up, and S&P and NASDAQ, but very, very slightly compared to where they've been here in the last 24 hours. So what we're seeing is, again, four different opportunities. Are all four of them tradable? Well, our members are going to find that out. All right. Which one is the best one? Our members are going to find that out. But you've got four good opportunities to look at here. Those of you that are watching this live stream right now, you've got exactly what it is that we're using. All right. Our first two lines of code. We've applied the noise filter to all four of these as well. And it's just a matter now of looking to see if we can create a high probability and a high profitability trade that meets our demands. Now, last thing I'm going to mention, you can find out more about being a member of QDP, and you'll know exactly what we're doing and when we're doing it, both on the entries and the exits, by just checking out the link on the screen. If you have questions about becoming a QDP member, then call Gabe and his team. Phone number is right there below. And of course, we give you top trades, we give you small group coaching, and let me tell you what else we're doing. We are starting to do next week bonus trades in our live environment. So if you've not been to one of our live QDP members only streams, come on in, because Joe's going to be doing coaching. And if we find some bonus trades, we're going to be doing them just for the live community as well. And all of our Quantum Data Profit members are invited to be part of our QDP members only live community. So there you go. We got a great trade we're releasing on Monday ahead of the Fed announcement too. So join me and the QDP team for what I like to call our next market crushing month. All right, guys, Thanks a lot for joining me. I'll see you all next week. Stay tuned. Garrett Baldwin is starting right now.